FOMC Minutes Day. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:08 a.m. Central Time, and I'm recording this in preparation for market day, April the 8th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what happened in our overnight session. Well, really very little, and that's not untypical of the action prior to an FOMC release. Very often things go very sideways. In fact, this morning I would suspect that we could have maybe some action in the first hour of the cash market, and then probably after that it gets quite sideways, choppy, no follow through until the release of the minutes. So be very, very careful in the initiation of any new, especially intraday trades during the day today. You could be really stepping in front of it. Crude oil, though, was a mover and was down over 2%. The other markets, euro, bonds, gold, all really either slightly up or just scratch. There's not a lot of movement going on there. In terms of China, it was up about 0.85%. Hong Kong up huge, about 3.8%. Japan up about 0.76%. Germany was the lone overseas market that we follow that was down about 0.5%, with the United Kingdom up about 0.5%. So big news today, of course, is the FOMC. You also have crude oil inventories if you are a trader in crude futures to be looking for. And we do have an FOMC member speaking right at the market open this morning. So that potentially could add some fuel to the fire. In terms of tomorrow, let's see, I don't really see much here. Natural gas storage, if you're a natural gas trader. We do have a 30-year bond auction, so if you are a bond trader, you might want to be careful about that right about midday tomorrow. Okay? And then in terms of the volatility, we continue to see this theme of very low historical implied IV percentiles. Standard deviation moves also have quieted down in recent days from what we were having earlier, but I would expect that to come back, and perhaps even as early as this afternoon. Short-term VIX down to a 13.90, so relatively benign from that standpoint. On our daily report, not a lot of changes here, and yesterday actually was a very good example of why we left the hedge status, where we did after the prior day's big bullish candle. We really have done nothing to decrease risk at this point. We still are very much in this compression stage, and the question is which way do we break out? And given the number of risk factors that have been identified in this current market, there's real potential that this could break down. That being said, the big posture is still higher highs and higher lows, and we're looking for continuation of the bull market until proven otherwise. That's a different statement than how much risk is there in the current market, and that still stands. Investor posture, IBD status is an uptrend under pressure. GMI at a 3 out of 6, no changes there. Active trader market posture flipped back to bearish, much as we thought might very well happen, and certainly that is telling. Position sizing opinions still somewhat mixed, with investor position sizing opinion at long side portfolio exposure up to 50%. From a volatility standpoint, that opinion comes in as 75 to 100%, because throughout all of this, the VIX has remained tame and is still within the window of 12 to 18. From a market posture, you see indeed all four the broad market indexes have flipped back over to bearish after just one day in the bullish stance. So Very, very typical of our action here of late. Market timing, there's no edge either way. It's neutral until new information comes in the market, both in the 1 and 3 day, with a 2 week as being slightly bearish. As I referenced earlier, the hedge warning status remains at threshold level 2. We had debated earlier in the week whether to go to a 1 and left it at a 2, and I'm glad I did at this point. We still see an awful lot of warning factors here. If we can get a true bullish with volume kind of movement, then we would feel better about dropping this down. But you see the VIX squeeze is still present on the daily candle. Number of distribution days, while has come down from the high of 9 of recent, is still very high at an 8. In fact, we would normally get kind of concerned about 5 distribution days on our count, and we are still at an 8. In terms of one thing we should mention, new highs, new lows. We had 386 new highs against only 40 new lows. So that was pretty solid signal yesterday. We still have that crash warning out there, and we still have 4 out of our 5 intermarket risk aversion indicators flagging as risk off. Opinions with respect to option income strategies. So we have this dichotomy of the VIX inside the acceptable window, but we have this significant number of standard deviation moves within the last 2 trading weeks, and would recommend consider reduced position size at the very least. And the other piece of this is to consider whatever option income strategy you take, that you consider that you will probably see higher volatility before you see lower volatility by any significant measure. Covered call strategies still neutral, calling for a 2-to-1 distribution between in the money and out of the money, and probably best set to not initiate new positions, but simply to manage current ones until our market posture returns to bullish, as well as a lessening of the hedge risk factors. Very difficult to hit targets when you're in this kind of status. Put selling, we are neutral at this point, so acceptable to sell puts against the core portfolio baskets that you're willing to own in the position size that you're willing to own. Caution should be exercised in establishing new positions until a bottoming pattern forms in the broad market. And let's see here what else we might have for today. Sector market posture, very, very mixed. Perhaps, even retail, which has been the star and one of our most consistent, quite mixed. A lot of flat lines here, so that continues to be problematic to these market postures. From a percent change, you see pretty broad action yesterday to the downside, with the exception of energy and healthcare. But obviously energy's been flip-flopping back and forth. We do think that energy may be starting to put in something of a bottom, but it is still a very, very volatile sector and requires the most nimble of traders. And I think we didn't grab the sector trader industry chart today, but so enough on that today. As always, greatly appreciate your liking us on YouTube, and if you'd like to take a look at the disclaimers, just hit the pause button. Get a little bit more time there if you need. And thank you from the Falcon Global Trading Community for your contributions to making everybody a better trader. We hope that you find that what we are doing here is making you a better trader. See you the same place tomorrow morning.